Amnish Aggarwal, Head of Research at Prabhudas Lilladher, joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, I wanted to ask you about the gas price hikes that we saw. MGL has gone ahead and increased prices. Some part of the street expected that because input costs did go up. The stock trades at a discount in comparison to some of its peers, and its profitability is relatively better. Your view in MGL in particular, and how would you weigh it against IGL as well as Gujarat Gas?
This is a problem with MGL. Hi, Nigel. The problem with MGL in the past also has been the, you can say, visibility on the volume growth. Because MGL has been more focused on, say, more like your MMR region, and you can say the volume growth there has not been that great. So that is one reason that the visibility of growth in MGL has been lower than some of the other city gas distribution companies. Now, coming to, you can say, other players like IGL and all, I think if you look at, say, past 5-7 years, the entire city gas distribution sector has got derated. Primarily because, first of all, the amount of margins which they make in the, you can say, your distribution to the households, okay, which is a piped natural gas. So that doesn't give you, you can say, much of a margin in the near term. And as far as your automobile is concerned, there has been a shift happening towards EV, more so from the fleets which are operated by the state, by the, you can say the best buses in, you can say, your Mumbai, or the buses which are operated by the Delhi Authority. Okay, so that is why the visibility on the volume growth has not been that great, and that is why if you look at the sector has got derated from where it used to trade, say, 5-7 years back. And I think the scenario is not going to change much from where we are standing in terms of P multiple. Whatever re-rating was to happen, we have seen in the past 12 months that the re-rating has already happened.
Okay. The other stock I wanted to talk to you about, Amnish, was Reliance Industries. I mean, it's come back in a big way, right? So this month, Reliance is up almost about 9% in the last 1 month, that is. And it has provided a lot of leadership to this market. Is there more on the upside, you think?
You see, if you look at the near-term numbers, whether it is, you can say, the petchem segment or the refining segment, you will not get any big excitement from there. But a stock like Reliance, I think it is not moving on that. First of all, last time we talked about the expected tariff hikes. So that has happened, which will improve the profitability of Jio. So incrementally also, I think Jio, then your retail, plus some, you can say, your news flow on the new energy side is something which is going to be the bigger driver of the stock rather than the core business. So I think as the markets continues to get clarity on these 2-3 new businesses, I think the stock will continue to make new highs.
Amnish, hi, morning. This entire railway/fertilizer, but PSU, common thread, RVNL, IRFC, IRDA, IRCON, in the fertilizer space, RCF, NFL, FACT, GSFC. If you want to take a shot at either of the two sectors, comment if you will. I mean, monsoon rains are finally picking up, and it seems like they're starting to progress well over much of the country. I mean, at least that's the feedback we got from the IMD. So what does that do for consumer-facing sectors, agri-facing sectors, etc.? Go on.
Okay, so hi Prashant. So I will take things one by one. First, you asked about the fertilizer stocks. Now, as far as fertilizer is concerned, my view is that the inherent growth in terms of volumes is not very great in this industry because your land mass at the end of the day is limited. Now, this year you might do better because the monsoons are normal, but the kind of re-rating we have seen, and then you can say the news flow around the nano urea and all. So I don't think, yes, there could be a case where some of these companies which are into ammonia and all, so there might be some sort of a play, but the core fertilizer companies which are into urea and all, so I'm not much excited by that. On the second basket you talked about was companies like which are into railways or PSUs like you can say IRDA and all. I think railways is more like a long-term story. The visibility of growth there, if I compare, say, a fertilizer company with a railway company, the visibility of growth is starkly very different. Fertilizer companies, except when you increase capacities, can't grow by, say, more than low single digit to mid single digit in volumes. Whereas the railway companies over the next, say, 5 year, 10 year, they can give you a easily double-digit kind of a sales growth very easily. So these are the two baskets. And when it comes to a stock like IRDA, you see, it's expensive. But at the same time, the kind of investments which are happening on the renewable energy and the kind of targets which India has to go to 500 gigawatts of renewable power, I think their overall loan growth as well as the disbursements, they will continue to move up. Now, where the valuation will settle, I think that is anybody's guess in today's market. But as far as growth is concerned, the group growth is going to be definitely there.
Okay,
Now,
growth is going to be definitely. Sure, sure. Please go on.
Yeah, so now coming to your last question on the consumption stocks, the monsoon has been good. It has picked up very well. But at the same time, one also has to look at two other factors. One is you can see the margins which the companies are trading at, and the second one is your valuations. Now, even if the growth rates pick up, I see a very limited possibility of very sharp increase in margins for most of the companies in the consumption space, more on the staple side. Now, what seems to be happening more, and it might play out more, that once the volume growths in the industry pick up, there will be some increase in the margins, okay, in line with your operating leverage. But the place seems to be more like a sectoral churn again, because most of these stocks, they had not done anything from the last 3 years. And today, in an environment where even the industrials, where even some of the other commodity sectors, they have started trading at very good valuations, then it's more like that there is a flow of money into the consumption stocks. And given the fact that the basket of stocks never changes, and so the market will assigning your higher P multiples. So my view is that incrementally stocks will give return, but a large part of that return will also come from increase in the P multiples, and not merely because of the increase in the, you can say, the profitability, or you can say increase in the earnings estimate.
The big event is the budget. Let's talk a little bit about that, right? Jeffries actually put out a very interesting note where they said that there could be a meaningful tax cut towards the middle class. And if that comes through, it's positive for discretionary stocks like e-commerce players, telecom players, retailers, consumer durables. So they've named names like, Nykaa, Bharti, Trent, etc. Do you think the run is done in many of these names, or ahead of the budget, are these still worth buying at this price?
I would like to separate the two. As far as your budget is concerned, I am also hopeful that after a long time, there will be, you can say, some meaningful, you can say, rationalization of taxes, which could benefit the middle class. Now, as far as your stocks is concerned, if there is some, you can say, benefit which comes to the middle class, then definitely the consumption sector should do well, and it should be much more broad-based, even for two-wheelers, you can say your cars, okay, and many of these retailers. Yes, they will fall into that bracket. But will that result in further increase in growth rates? The answer is yes. But in the near term, yes, the P multiples can further go up. But in the medium to long term, is there scope for further re-rating of these stocks? I don't think so.
All right. Amnish, ITC, after a very, very long while, yesterday it came back to life. In the last 1 year or so, the Nifty is up 25%. ITC, I think, is still down close to around 4%. And yesterday we saw the highest close in 5 months. Any view on the stock at around this 440 rupees?
I think ITC is looking very promising to us, because last quarter volumes in cigarettes were positive, and I believe that this quarter it should be again the same, which is, you can say, 1Q. Now, as we go along, see, in the last particularly 2-3 quarters, they have been witnessing margin pressure in paper, in agri. Even cigarette volumes for 1 quarter, they were on the negative side. So I think in terms of numbers, the things will start improving. Now, if there is no major tinkering of cigarette taxes in the budget, I think the way the entire consumption sector is going up, staple and all others, I think ITC at the current valuation and given the dividend deal, I think ITC definitely looks very good, and I won't be surprised that if it gives 10 to 15% return from these levels over the next year or so.